welcome, sir.
All right, glad to be here.
I'm glad you made it, and we're on live here. We got some more guests coming in soon. I was just laying out who I was, and I was about to introduce you. I was telling about Mr. Herman Hicks, the private banker, but also the CEO and founder of Elevated Development. I want to, give my props out to
Oh yeah,
yes, sir. Yes, sir. There we go. I love it.
I like it. Yeah, I love it. I love it too.
Yeah, I love the work that you're doing, man. And I'm glad I was able to even bring my legacy, my offspring, my children, my namesake, and my one and only daughter and son to your event last week at the African American Music Museum.
Mm-hmm.
And my son walked away with a nice a nice paycheck that evening because how y'all were blessing the young people. And so we're excited. Can you tell us a little bit more about what you do either as a private banker and or what they do more in elevated development, please?
Absolutely. And first of all, Michael, thanks for having me on during this time and building with you. I think we've known each other for a couple of years now, and we met through the bank. I believe is where we met, and we both are on similar missions and have similar passions. So I love working alongside people that share in the same passion. But my skill that I have is that I've acquired and got designations and degrees and everything around is I'm a private banker, and really all that means is I typically work with affluent and wealthier individuals. Let's say $500,000 or more in what we call investable assets. And so a lot of people ask me, well, what is investable assets? And I say, well, it's liquidity. A lot of people ask me, well, what is liquidity? Well, it's checking, savings, stocks and bonds, cash surrender value of life insurance, all of those financial instruments that you can get to in let's say 5 days or less. Typically it's 3 days or less. You can cash in, turn it to cash. So it's liquid individuals. And so my job is to identify the money, grow the money, protect the money, and transfer the money to the next generation. That's essentially what my function is as a private banker. And I work with individuals regarding their investments, regarding their real estate portfolios, also their business interests. So I work around in that arena right there. So that's been a blessing. And I've been in the financial industry for 21 years. One thing that I recognized over my history in the financial industry is a wealth gap. And with that wealth gap comes responsibility for people like us, fiduciary people that work in finance. And so what I decided to do was create really resurrect something that I was doing in college, which was called Elevated Development. And I was doing this with high school kids and middle school students in college back in the mid 1990s. So 1998 is when I think I really started putting this thing together. And so fast forward to pandemic, we launched it. Our first event was last May 30th. So the mission of Elevated Development is to confront multi-generational poverty and financial deficiencies by closing the wealth gap. And we have a methodology and a philosophy that we use called the circle of wealth. And that really is our foundation, and everything, the circle of wealth is in place. And then everything kind of grows from the circle of wealth. So the right side of the circle is what I call financial literacy. The left side of the circle is what I call wealth literacy. So we marry those two, and we focus it on high school students. Now, if I could just say one more thing, what differentiates us from other community organizations and nonprofits, not only are we doing financial literacy and wealth literacy, but we also have a program of teaching capitalism, and that's fee for service or incentive for performance. So what we do is as the students engage with us, we incent them to engage. So we pay them money to ask us questions, to make comments, to be engaged in the conversation, because that's what capitalism is in the real world. You have to do something to get paid. And so we're also, not only are we giving out this money, but we're also teaching where to place the money. So I've had countless conversations with parents and students about some of our larger incentives, how to place that money. So so the smaller incentives, I think your son racked up. I don't know how much it was, but I know I gave him a stack myself. So very impressed. And so those incentives, are kind of fun incentives, but we always give away larger incentives for some type of investment. So yes. So thank you for allowing me to talk about that. I'm passionate about that and committed to that for the next 20, 25 years.
Perfect. Yes. So we're pretty much parallel what our missions and beliefs are as it comes to financial literacy. I was there that night, and I'm online sometimes with you, and what y'all did recently with the scholarships for our young people as well. It blew my mind. It's the same thing we do in the companies I partner with. And I love partnering with people and collaborating with people and groups that allow financial literacy to flow in the lives of others. And one thing we do in teaching, what we teach in financial 3D, which is financial dignity, financial dominance, and financial destiny. That's what the 3D stand for. Dealing with money management, credit, and then wealth building. It just just all of what you do. And that night when you did the incentives, and when I teach high school as well, and incentives are the basis of our economy. That's what economics is all about, is incentives. Get people to do things. What's the incentives? And that's what you have done. You've allowed them to realize you are part of this economy, and to become more powerful in the economy. Incentive is what helps us become more involved in the economy. And I don't know how much my son walked away with, but he likes to save his money, and he spends it wisely. But if his older sister got a hold to that, it would have been gone already. So, but what I love about
and I was just gonna say, that's how it is. I got my older son, same way. He will spend that money, and my younger daughter, she'll stack that money up. So yeah, that it's always a spender and a saver in it.
That's it. I love it. I just introduced. She's about to enter high school, and I just introduced her to the power of a checking account and having a check ledger and keeping up with the info. But it's an account to where I can put money in, like an allowance or incentives for her grades and whatever else she does, her accomplishments, and she keeps track of it. And one thing that I'm making sure she understands is the power of spending and money management, I should say. And then, she's getting older now. I mean, but how us dads, we'll buy for a little girl, hey dad, I want a pair of Vans, or, can I get this purse, or can you buy me this online? I saw this. He sends you a screenshot, and that's like, okay, I think it's now time for you to understand the power of your money. And so that's what we're doing right now with her. And with, like you said, last evening, when my son was asked those questions, sitting down with him, and empowering him with the knowledge, I was explaining to him the power of real estate, which you all were talking about that evening, and how you can use real estate to really build wealth. And when I was explaining it to him, how, purchase land, or if you purchase a land with a residence or a house on it, and you can rent it out, and that money comes in from rental income. And we talked a little about passive income, but really just rental income. And at first I'm thinking like, okay, this might be too heavy of a topic for a 9-year-old. However, he said, so what you're talking about is just like Monopoly, right? I'm like, yes, that's it. So he fully understands it. And those particular games that we play with our kids, these are positive games. It's not just, video games. It's not just any other regular game, but these are games that teach them and empower them. And when he said it's just like Monopoly, my mind just blew up, and his eyes lit up. Oh, it's just like Monopoly. So he understands at that age, and we love what you're doing with the young people as well, and teaching them the power of building wealth and closing that multi-generational wealth gap. And I love that, what you're doing.
Oh yeah, I love it too, man.
Yeah,
good stuff with your son.
Well, I appreciate it.
He's gonna be a powerhouse one day.
I'm looking forward to it. So that's why I'm here tonight as well, to help people understand the power of mastering credit, because like I said, we've been knowing each other for years now, starting with the bank when back when it was okay to mention the bank that we met. Is that okay? Okay.
Yeah. We do anything.
Okay, good. So back when First Tennessee was First Tennessee, now it's First Horizon.
Mm-hmm.
And so that's where we met. I was working with another nonprofit at the time, and which was Operation Hope.
Mm-hmm.
Excuse me, great company. And we were in the community helping those who were economically disadvantaged at the time build their credit. And as the Lord led me, I was able to move out of that role and into a role to now I can help people more liberally with more, more tools and tips and techniques to help them build their credit as well. And my hat's off to John Hope Bryant, who is the CEO of Operation Hope, and how he's collaborated with many other banks across the nation to help people reach that, come out of that pit, that financial curse that they have been dealing with generational. But now what we're doing with our business, Financially Better Credit Services, that we are using the power of the different services we give to help our clients in the community. We go out and speak just like you all. And like I said, I'm always looking forward to collaborating with groups such as you all to help people master their credit. And I thank you once again for coming on tonight.
Oh yeah, my pleasure. Yeah. My pleasure. Glad to be here.
Yeah, so we're going to answer some questions, and please be free to interject tonight with some of the items I bring up and in our presentation. And I told a little bit about me myself. I wanted to get past all that, but we're talking about living in financial 3D. And specifically tonight, we want to deal with financial dominance, which financial dominance is basically using credit to help you build wealth and you building that credit score. Now, financial dignity basically deals with money management, and financial destiny, like I said before, is the wealth building. So we're going to get into that tonight. And there was a poem by Robert Frost, which you might have heard before, about the two roads that diverged in the woods. And he said, I took the one less traveled by, and that was the path that made all the difference. A lot of people are still doing the same thing over and over, expecting different results, and that's called, as we know, insanity. And it's time we teach people how to take a different path in reaching that level of financial dignity and that wealth as well. So what I do is help people change their mindset. And in the session, I want to really look at different ways. So you think the only way you can make money is becoming an athlete or a celebrity or a rapper or something like that and be on the big screen TV. But, I'm looking at people who have had that money, and some of these faces might be familiar to you. And they're like these people who have filed bankruptcy. These are celebrities who have had to file bankruptcy in their life, and they had a lot of money. I mean, millions of dollars, and they've gone through that. Even not just those celebrities, some athletes and other stars that have gone broke. And so it is so important to let people know that it's not all about being in the spotlight to make you money, but there are people who have private prosperity, and there are individuals who are behind the scenes and how they use their funds. So what I teach my young people is they were born to win, and that you are a winner already from the beginning, because I tell them that this little, on average, I say each time like a man ejaculates to fertilize a sperm, there are over 100 million sperm that are on this race, that are on a race to get to that finish line of the egg. And I said, how many people, I said, here's my question. The question is, who here under the sound of my voice won that race? Of the 100 million that ran that race today, who here under the sound of my voice won that race? And of course, they have to say, it was me.
It was me.
Yeah, it was me. So from the point of conception, you were a winner.
Yeah.
So what I have people do in my sessions, whether they're a teenager or in their 50s, whatever, 60s, I have them shout out, I'm a winner. Because it's all about a change of mindset first. You got to know you're a winner in whatever you do. And so when they're a winner, and it's so important that they verbalize this, because people have spoken so many negative things in their mind, in their lives. So it's time we change their mindset. And, in Proverbs, it says, whatever a man thinketh in his heart, so is he. So we want to change that mind, change that heart as well. So let's talk financial literacy. Let's talk financial 3D. And I want to get your insight as well as those individuals who are not your clients, but you've met before in a lower social economic status. what was their mindset when it came to finances that you remember?
Well, I love the changing of the mindset. One of the things that I like perpendicular. So we're perpendicular on several things, and perpendiculars are two lines that come together. And when two lines come together, that creates an explosion.
Okay.
We take that energy and we want that energy to be positive, and we want to put that energy in a positive place. And that's what we're doing. So with the changing of the mindset, there's a slide that I share with our student participants, and it has a heart, it has a peace sign, and it has a smiley face sun, and it has a bag of money. And I asked them, what are these symbols? What do these symbols mean to you? And inevitably, what I'm trying to get to is the sun being happiness, the heart being love, peace sign being peace, and the sun being happiness, and you got a bag of money. So the whole purpose of it is the money should not bring you love, peace, and happiness. Love, peace, and happiness should bring you money. And so that is that changing of the mindset. When we talk about socioeconomic differences, we always think that, or a lot of people feel like happiness and love and peace comes with money. You get money, then you get those things, and inevitably it's the opposite. You get money and you get heartache and strife and all types of stuff if you're not in the right mindset.
Yes.
And so what happens is we then revert back to not having any money. So we don't manage the money well once we get it. And so we get a break in life, and we get an inheritance, but we don't have the understanding of love, peace, and happiness bringing us money. So we revert back to getting back in debt because we don't know how to operate. So, and then I think that if you boil that down to a grain, I think that grain is called fear. We have a fear of money. We have an intimidation of money. We have we have a get over spirit when it comes to money. And so I think we have to, I think it starts with changing the mindset and understanding what is important. Love, peace, and happiness bringing you money, that can go forever. If your love, peace, and happiness is already there, it's already in alignment, and you just happen to have money, that's great. Then the other thing really quick is I like to talk about the science of money. I think money's so emotional now. I love bringing science. I love bringing ratios and numbers and percentages and basis points, and really putting some science and math into it that's measurable and is in the box and is absolute, where there's no feelings involved. It is just a number. It is just a percentage. It's the science of it. So me personally, I look at money from a scientific standpoint. I no longer look at money from, I got to get all of it that I can, and that's okay. My job is to help people get as much money as they can. That's my job, but it's a job and a science and a skill at this point in my career. It's not, okay, Herman's got to go out here and get all the money that I can, but that's what you find on social media. The people that follow people on social media, those people appear to be extremely wealthy. I don't want to sound like a hater, but some of those things are controversial to me. So I don't necessarily believe that to teach and to change your mindset, you have to strive to be a billionaire.
Right.
I just don't believe that. I think love, peace, and happiness is what you should strive for. Let the money come and surround that. So great kudos. I love the fact that you're talking about the mindset, because that's where it starts.
And that's where it has to. And when people get in that mindset about what money really is, I like what you said as well, that the math behind money, and I also let people know that money is just a tool. It's not the end goal. And it can destroy, just like a hammer. It can destroy or it can build. And once you get in that mindset about what money really is, it can help take the stress off people and say, okay, it's just a tool. It's not the end all be all type of thing. And that, but my concern is a lot of people still don't get that. 78 now, even more now. This was 2017, but a few years later, we have more people that are living paycheck to paycheck, purportedly. And we're trying to change that because, of course, in 2020, due to the quarantine and the jobs being lost and what happened with the outbreak and so forth, people have lost their job. More people start using credit cards just to survive.
Yeah.
And it's going up in a higher percentage. Before, the regular household credit card debt was $15,000, and it's going up more now. I got to get those recent numbers for 2020. But I believe it's up in the low to mid 25,000 range, credit card debt, if not more. So we're pulling that up. But my goal tonight is to really help people master credit, to build it up. And from your experience as well, from the inside, as an insider, you would know exactly how to help them out. One thing that I do recommend for those who are starting out is maybe apply. I don't really recommend this all the time. It's to apply for a department store card or a gas card, something simple just to get them started, especially if you're starting over or if you're young people just getting started. I would recommend that. However, I know that's limited in how they can use their credit in certain places. It's not the universal cards like MasterCard, Visa, or American Express. However, this is a good starter out. However, in your case or in your experience, how do you feel about the department store cards or gas cards? I also recommend a secured credit card, but we'll get to that in a minute.
Gas cards, I've never recommended a gas card. I definitely see the value in a gas card because that's something that you can easily pay off month to month. And that's where you want to be. You want to be able to manage that debt. For young folks, and I may be jumping the gun, but for young folks, like for my son and my daughter, I made them authorized users on my cards, and so that was a pretty easy way to get them started. We got something called the 700 Club, where we want all of our student participants in elevated development to have 700 or better credit scores by the time they're 19. And it starts at home. It starts with the mindset. Let's just build on this. It starts with the mindset. Then it starts with being strategic, like you said. Kind of start in a safe place, being an authorized signer. Gas cards, I do think that's a pretty good idea, is to utilize gas cards. And then also you got your department store cards, which obviously you get discounts on clothing. We all buy clothing. And so you get the discounts on clothing, and you also can manage that a little better because, that card may be a $2,000 card or a $3,000 card. And so you can manage that card month to month a little better. And so either way, I think, when we look at it in proper order, you've got to have a source of income. So you've got to understand your income. You got to understand the money that's coming to you. Once you spend time and just reflect and know and understand, hey, I got $3,000 a month coming to me. I got $3,000. You've got to have a source of income to pay for your credit. Otherwise, you're going to have a problem. And so you have to measure your source of income to your credit. And we got a great tool called debt to income to do that. But I do agree that I think, that those gas cards could be a great way to build credit. Authorized users, authorized signers with people with good credit. Authorized signers won't hurt somebody with good credit because typically the main person is paying the bill. So as an authorized signer, you're just getting the benefit of somebody else paying the bill. So maybe you don't actually get a card, you just get your name as an authorized signer. And then of course, manageable debt. I mean, if you're making $3,000, what are you doing with a credit card, a $25,000 credit card? I mean, I think we have to manage our debt. It's okay to get a $25,000 limit, but you can ask for a reduction. You can threaten to close the card. I mean, keep it manageable. Keep it manageable. Don't get more credit than your income, which you're upside down.
I love the way you said that. That's one of the lessons I teach when it comes to debt and credit is the two terms is managing debt versus making debt. And we have so many people just making debt and not managing debt. And I love what you said, know what's coming in, your income, so you can know what's going out. And that's powerful because one thing that I do recommend for a lot of my young adults is being an authorized user. But when they say, well, I would do that, but my mom or dad or whoever, their credit's jacked up, so I can't even use that to be an authorized user. But once again, we have to inform and empower our adults as well. So I said, well, okay, you're turning 18, and what about a secured credit card? And one thing you do is a secured credit card. That's one of the things that we do. However, a lot of them may not have that chunk of change to put down on that card, and for the secured credit card. And since they don't have credit history, they may not be able to get an unsecured credit card to start off. And sometimes the banks, and I've heard this from a lot of clients, sometimes the banks say, well, you got to have a minimum credit score to even get a secured credit card, even though you're putting money on it. Hey, it's your money. But then banks say, well, you got to have at least a 620, or you have. And I was like, well, isn't it your money? And why are they? So can you explain that to our people as well? Is that a higher up thing?
Well, and I'm just gonna, be transparent. I mean, it's a barrier. It's a form. It's essentially a form to keep the wealth gap where it is, because you got to understand economics. Economics will tell you, for somebody to obtain wealth, essentially somebody has to lose some wealth. And so we don't measure that microscopically.
Okay.
If we did, we would be able to see, okay, Warren Buffett, this month his portfolio is down $250,000. Well, John Smith's portfolio is up 150, and Jane Doe is up 100. So I know we don't measure it microscopically, but I just feel like that's a barrier. I mean, if you can't use your own money to establish credit, that's a barrier. That's some of the things that perpetuate the wealth gap. Wages, credit. I mean, I can go on and on. Literacy, those things perpetuate the wealth gap. And so I said today in a post that when we talk about Juneteenth and freedom and equality and justice and things, and George Floyd and things that's happened in the recent past, one of the most, I guess, prejudice, I don't know if racist is the right word, is the American financial system. And it is designed to really put a lot of pressure on those that are poor and have bad credit. And because by definition, if you have bad credit, what we teach in elevated development, that means high interest rates. And when you have high interest rates, that means you paying out a whole lot more money. That means that money that you paying out is the money that you could be investing. And so you got to change the mindset. You got to flip that. You got to flip your high interest rate to low interest rate so you can save that and invest that extra money. So it creates a huge barrier. I did not know that, Michael, that banks were denying people unsecured credit cards. That's a problem right there.
Yes, and actually that's why I had to connect people with our secured credit card, which doesn't even do a credit check. You put the money down, we report to all three credit bureaus. And since we're being transparent, I know one of those banks was First Horizon. And because clients came to me, they said, well, they're not going to approve me, because I was like, well, that's ridiculous. You got the money, and it's a line of credit that is your money. But nonetheless, that was years ago. So that could have changed. I spoke with a bank manager, and they said they were speaking with the higher ups, the regionals and so forth, saying that, well, they're trying to update that so people can have access. But you're right. One of the things that is keeping a lot of people from building wealth is credit score, as well as that, and the lack of knowledge. My people are destroyed for lack of knowledge. Even from my experience, I know it deals more than just the color of your skin. However, that is a determinant. That is in a lot of cases a determinant in some areas. However, I'm looking at people who, whether they have more melanin than I do or less melanin than I do in my skin, their credit score is what's keeping them from obtaining what they desire for wealth. And I know since people who are African descent mainly, and they have, it's like we are started in a relay race, but we started 50 meters behind the starting line. And now we're trying to catch up, and maybe we're now 40 or 30 meters closer to, but we still got people who have generational wealth, who's or 3, 4, 5 generations already built that. And we're just now getting to maybe the second generation and a small percentage of that. And I know most of your clients you see are, I'm going to say, of a European descent than more than anyone else. But I love what you're doing in closing that gap, and which brings up my thought about building relationships with a bank and how crucial that is for people to open up checking accounts and savings accounts. How do you see that as a benefit to people?
It's funny. Somebody posted something about banks today, and I made a post, that it's not just putting your money in a bank. You need to form a relationship with a person at that bank or people at that bank. And one reason is your direct deposit could be going into that bank for 20 years. You could be a 20-year bank customer with your direct deposit going in there every single 2 weeks. And when it is now time for you to purchase a home, you funded that home 5 times over with your direct deposits over time. And guess what? You could still be denied credit. And so that's the power that the banks have, is no matter what you do, that's the power of credit that the banks utilize. No matter how much cash flow you have, cash flow, just like you said, you can have your own cash and still not get approved for credit, and I know First Horizon may do that, but I'm sure they're not the only bank that does it, because one thing about First Horizon, it kind of mimics a lot of other banks. So it kind of falls into what other banks are doing. Let somebody else be the lead bank. Okay, we'll do that. So, I think it's important to really form a relationship with a bank person, and to get multiple relationships, because that's where you can put pressure. You put pressure on the banker. You put pressure on the person when you go into the bank and you deposit your money, or you deposit money, or you withdraw money. You talking to somebody, they know you, and when you walk in, they should know who you are. Oh, that's Mr. Morrow coming in. He comes in, once a month on third Thursday. Okay, so then when you come in to get a loan, that banker, those people are going to push for you, because credit is, the credit score tells a story, but never forget that is not the end of the story. There are people that can push buttons to overcome certain credit aspects, and so form those relationships, build those multiple relationships with multiple people within that particular bank, if that's where your loyalty lies, so those relationships will work for you, not just your credit.
Thank you. Yeah, that's so important. I want to get that into when it comes to this. We got a couple of questions in chat I want to bring up. A question that says, does that even relate to your DTI, or debt to income ratio, and how it may be a little high, but even though, the 40, 50, maybe 55%, that individual banker or bankers you built that relationship with, will they push for you still for that approval?
My answer is yes. I think so. If you got pressure, apply pressure to that banker, because here's the thing. If I've built a relationship with you and I've been with this bank 5 years, and then I have a track record of employment for 15 years, and I have cash in the bank, and you see my paycheck hit, then that gives the banker the ability to go to the underwriter and pardon me, I'm sorry, and make a case and say, hey, Mr. So-and-so has been a great client. He's got money in the bank. Now, I'm not saying that you'll get the loan, but it gives you a better opportunity. And that's what you want. You want to be able to make a case, because then now you have a little leverage to say, okay, well, I'm bringing my deposits out of this bank and I'm going somewhere else that may value my business even more. And so then you really got the ear of people when multiple people start doing that, and you got multiple people, and then you take some people, so it's power in that. So yes, you can overcome high debt to incomes. The other side of that is like you said, Michael, I think it's financial literacy, is understanding, okay, let's just say I'm a high earner. Let's say I got 4 different hustles I got going on, and I'm bringing in $10,000 a month into the bank. Well, on my tax returns though, my tax returns say I make, $5,000 a month, but you can see over the last 3 years, I made $10,000 a month. Well, there's a case there. And that's the case is this person's what we consider could be high capacity. So even though their debt to income is 55%, if my income is $10,000 at 55% or $5,000 at 55%, I got a much better chance at 10,000 at 55%, because even though my debt to income is high, I have cash flow up and above and beyond the amount that I have to pay out. Does that make sense? So case in point, I had a customer early on in my career, early 2000s. It was a doctor, wanted to purchase a home, great credit, but he owned a home, owned several cars, had several toys, a boat, all this stuff, made like $250,000 a year, and his debt to income was right around 48%. Sorry, got my fan on it here. It's messing with me.
It's all good.
So 250,000 48% is totally different than 50,000 on 40%, 48%. So that high capacity allows you to make a case. So people that have side hustles that don't get tax returns, or they don't have tax returns, but they are deposited into the account, I think you can make a case for that. And those are the types of things that we have to put pressure on banks and the system to recognize that, because there is a wealth gap. So we need to level the playing field. So we need innovative thought process to level that playing field. And I think that's one of them. I know people may disagree with that because it suggests people are not legitimizing their side hustles. But at the same time, money is money. And if money's coming in, then and it's deposited in the bank is benefiting from those deposits. And so why not the customer benefit from deposits?
And I've met many people who, especially people of our culture, who have said, well, I'm making this money, but I don't want to put it in, or I want to report it because tax, Uncle Sam going to get a piece. But then that's the issue, that they stay under the radar when they should be on the radar, and they need to make this known to the banks. And the banks say that they think they're walking hand in hand with the IRS, which I don't believe they are.
No, absolutely not.
No, it's basically, you need to be on the radar. I'm trying to get people, if you want to really be a legitimate business, I'm trying to get them to get EIN numbers, business checking accounts, your DUNS number. I'm trying to get them to get all this information to register with the state, to become a legitimate business so you can be recognized. So if you want to go into the bank and to get a loan for, let's say, you want a brick and mortar business, and you say, hey, I need $500,000 to get started. And you bring in, let's say you bring in 20, 30 a month, and you have great credit score, but you don't report that 20, 30, you only report 5 of that, and that's an issue to me, because it's telling me either, number one, your mindset is, I don't trust banks, I don't trust, that stuff like that, which is, that means you don't understand, or 2, you doing something on the table you shouldn't be doing. So, but it's what hurts me is you have a lot of people who have great businesses out there, but their mindset about money and the banking system is kind of warped by a mindset of the past and not understanding what's in the present. Even when our young people, when you said building relationships, now we're in this digital age where I can just deposit, give me a check, I take a picture of it, it's electronically deposited, or I can do things without even looking at a banker. so that it's hard for them to build a relationship. So how can someone build a relationship with a banker or anyone in the banking system when everything is so digitized?
Yeah. Great question. Great question. I think you have to, you still, banks are required to have some point of contact, whether it's online, whether it's on the phone, so I think you have to pick and choose who you want to establish a relationship. If you want to deal with somebody online, I think you need to have a name. You need to talk, you need to try to establish an individual. And if you can't achieve that, I think you should go the traditional route and go into a brick and mortar bank and establish a relationship. Some banks are required to have brick and mortar that do certain types of loans. And so, commercial loans, you in a sense, you got to have some kind of brick and mortar, some kind of corporate structure to do that. And I think it's very, very important. But I do want to kind of come back. I walk a tightrope because, what I'm fighting now is, and sometimes I'm all alone doing this because I feel like it has to be done. But there was a poet laureate from New Jersey by the name of Amiri Baraka, and he said to me, he came to our college and he spoke or whatever, and he said something really profound that stuck with me until this very day, and it'll stick with me forever. He said, whoever's in control decides whether something's right or wrong or not. So even though the PPP loans came out and banks benefited, there was a tiered system where banks got 3%, 2%, and 1% on every single PPP loan. So banks as a whole got paid. But if you were an individual that were doing the PPP loans and you charged money, you could possibly be prosecuted or caught up in that. So as an individual, in certain instances, you couldn't charge money to do a PPP loan for somebody. However, banks were able to make money. And again, it decides, it's because whoever's in control and in charge said, hey, banks could get paid, but individuals could get paid. Mm-hmm. So if I'm thinking about closing the wealth gap, if I'm thinking about figuring out how do we level playing fields, and this is colorblind. This is not just for African Americans, because white folks, black folks, Chinese, there were a lot of people, Native Americans are on the bottom end of the wealth gap. There are plenty of people on the bottom end of the wealth gap, all colors and sizes, shapes, and everything. If I am selling shoes, if my 19-year-old is selling shoes out of the trunk and he's making money, he's depositing into the bank, surely, eventually, at some point in time, he needs to legitimize that business. However, on the flip side, the bank is accepting those deposits. And so if the bank is accepting those deposits, then those deposits should now be considered live money. Those deposits should be considered earned money at that point. And so you got a tax problem because you're not paying taxes on it. That I give you that. But it also is earned money. And so how do we account for that? I know we need to start a business. We need to legitimize, get the paperwork together, get your EIN, get your bylaws, get your charter, whatever structure you have. It could be a sole prop. You actually don't have to file anything. It could be a sole proprietorship. But banks need to recognize those deposits if they're going to leverage those deposits. And that's what's been happening over time. If we could go back, like you said, people that are trying to avoid taxes and doing stuff under the table and getting paid, if we could go back and capture those deposits that are going into the bank that are now being leveraged to give out to loans and the bank is making money on those, I would be curious to see what that number is.
Yes.
Because that would be an interesting number.
Yes.
But anyway, I'm trying to be, I don't want to get outside the box too much, but I try to push the box out because I'm trying to figure out ways to level the playing field. And I'm not saying that that's a way that we can level the playing field, but I am exploring that where we got all these side hustles out here. People are depositing money into the bank. They haven't legitimized it, and they won't legitimize it until they change the mindset. Changing the mindset comes from within. You can't change it. I can't change it. Somebody has to change it within. All we can do is put the information out there. But until we get the mindset changed, if the banks are able to leverage that deposit, the depositor should be able to leverage that deposit as well. And so I'm just trying to figure that relationship out. But I agree with you that we certainly need to legitimize our side hustles. We need to pay taxes on them, because the only way we can grow them is legitimize them. You can't grow an illegitimate business. Mm-hmm. You know what I'm saying? You can't. So we definitely need to legitimize. I think I got off on a tangent, Michael, but bring us back.
It's all good. But I can bring us back because we can even use personal credit to have our business, but we can also use business credit to build our business well. That's something we'll talk about in the near future. But bringing back to where people can get those approval for those loans, whether the deposits are legit or not. I'm looking at the credit score, because I know banks look at financial statements. That you don't care about the GPA score they made in high school. You care about the credit score they made in order for the loans. And so when we talk about that, I want to look at these just very briefly. All these items we see here on charge-offs and collections and bankruptcy, all those things can put a hindrance or even a stop on you being approved for any type of loan. Question: have you seen a loan approved, like a high-end loan, approved with these items on here, or did these really have to be cleared off when it comes to a credit report?
The only item that has stopped every single credit that I've ever been a part of is a tax lien. And I've looked at tens of thousands of credit applications, whether it's personal or business. I've seen charge-offs go through, collections, even bankruptcies. But tax liens shut it down every single time. And you can clear it up. You can clear a tax lien up. And I'm not saying that, but that there was nothing we could do. So for instance, collections. You may have a small medical collection. That's not going to stop it. You may have a charge-off, and your charge-off could be, you could have been an authorized signer, or you could have been a co-signer. And we got information on it, and it could be small. Now blatant charge-off, you got a $50,000 charge-off on your credit report. No, that's not going to fly. But let's say you have a small charge-off, even a bankruptcy. You file bankruptcy, people do loans all the time right after bankruptcy. I mean, there's a whole industry, secondary lending, predatory lending, bankruptcies, even foreclosures, lawsuits, judgments. But for some reason, Michael, man, the tax liens, the IRS, those property liens, tax liens, any type of lien by the federal government, I think that stops everything, because that automatically is first in line when you come to liquidation. So if somebody's buying a home, none of these other items are attached per se, except for a tax lien. I mean, a foreclosure, you could have it on that particular piece of property, but a tax lien is going to be on everything that you own. It could be across all of your assets. And so I think the tax lien from the IRS carries the most weight, because it's not controlled by the banks per se. Okay. The banks control the rest of these items on this list right here, except for the tax lien. Okay.
Well, that's good to know, because I work with a lot of clients and we dispute their credit. And I try to get all these charge-offs and collections and bankruptcies clear. And there was only one client we had with a tax lien. And what they basically did was they got a small loan to pay off that tax lien and get it cleared off their credit. They paid off the IRS, and then they were able to get their house. And it was an elderly couple. What was so powerful about it, it was an elderly couple that was trying to get out of a place that they rented, and there was mold in the house, which was affecting its respiratory system. So I was working with the bankers to go to bat for him with the situation. And like I said, that relationship with the banks turn around till we get that small loan, pay off that tax lien, had proof of it. And even though it hadn't been removed yet from his credit report, the paperwork saying it's been paid in full, they put it in the file and he was approved for the home and he was living free. And I was able to interview them after the fact, and we put it on that interview on our YouTube channel, and how they were so ecstatic for to get out that situation. And I was happy for them as well. And it just, that's the difference I love to make in people's lives, to where it moves them to a new level. A lot of people don't want the big home. They don't want the fancy cars. They just want a comfortable life. Mm-hmm. And be honest about it, having a good credit will get you that.
Oh, yeah.
As well.
Absolutely. Absolutely.
But last but not least, I want to close this out, man. I appreciate your time. But I was talking to some people yesterday at another program that we were. And when we talk about credit, sometimes we're ministering to people. We're not just educating people. It's really like a ministry, to where we help people really build their credit score, how to help them. And I told them about these top things you can do to help your credit score: paying bills on time. If you have a credit card, charge a small amount on each card, pay it off. Try not to close out any accounts unnecessarily. Be cautious of getting credit card solicitations in the mail, signing up for everything that comes in the mail. And don't close out accounts unless absolutely necessary. The number 3 was don't open accounts unnecessarily. But then the last one was pay off credit cards before auto loans or mortgages, because paying off the credit cards will jump your score faster. Tell me what catches your attention more on this list than anything else, especially number 6. Is that something that's true? Because I've researched it and I've experienced it, but tell me what your take on it is.
Well, there's 3 categories on the credit report. You got mortgages, you got installments, you got revolvings. Yes. Your mortgages is obviously your homes. Your installments are obviously your cars, boats, motorcycles, airplanes, equipment, whatever. And then revolving is your home equity line of credit and your credit cards, things that revolve. Well, typically, credit cards are going to carry the highest interest rate. So if we're talking about building wealth, and we go to our sources of income, and then we go to credit, and we want a high credit score so we can have low interest rates. If I got a high credit score, I'm gonna have a low interest rate on my auto loan. I'm gonna have a low interest rate on my mortgage. However, my credit card I could have an 800 and still have a double-digit interest rate on my credit card. It just works that way sometimes. I've seen it. Mm-hmm. So I would agree that not only paying off credit cards first jumps your score quicker, but it also helps you to build wealth because you are decreasing your interest rates. So you want your interest rates to all be lower than hopefully your worst investment. So if I'm investing in a 401k and I'm turning 9% on my 401k, that means I don't want any debt with an interest rate over 9%. You see what I'm saying? So that's right sizing your cash flow. That's right sizing your wealth circle. So I would agree that paying off credit cards first is a great strategy, not only because it boosts your credit, but it allows you to build wealth faster because you can save more money, and you got to have a mindset. But that jumps out at me. I love the fact, do not close your credit accounts. And I would just add your credit accounts, because the installments and the mortgages close upon maturity. A credit card really has no maturity. And so, the older your credit, the higher your score can become. So I definitely wouldn't pay off any credit cards, or I definitely wouldn't close them. I'm sorry, I wouldn't close them. And then online payments. I mean, with the online payment structure, you put it on autopilot, and then you don't have to worry about it. I think all of my payments are on auto payment. I don't even know how to function outside of auto payment on my credit items. And the other thing, Michael, I think is worthy to add on here. What I've learned over the years is people don't actually know what's on the credit report. They don't know, is my insurance on the credit report? The high school students, I drill it into them. We do a little game and we're like, you got $100. Your car loan is $100. Your cell phone bill is $100. Which one are you going to pay and why? And the hope is they say their car loan because their cell phone bill, monthly bill is not going to pop up on the credit report. So I pin them against, you got a mortgage, you got $100 and your mortgage is $100 and your mortgage is due and your power bill is due. And you only got $100. Which one are you going to pay? And, it's like, okay, let's pay the mortgage because the power bill is not on the credit report. And I'm like, y'all willing to sit in the dark? And they're like, yeah. I said, okay, y'all get it, so go buy you some candles, go buy you some flashlights and because you need that when you buy a home or rent a home anyway. So I would put on there, some adults don't realize what actually is on the credit report.
Okay.
And so
that's true.
just knowing that, mortgage installments and revolving accounts are what is actually on the credit report. And that's what you actually need to protect. Those are the items you need to pay first when you're talking about your monthly budget. That should be at the top of your budget. How we look at a balance sheet, we put liquidity first. On your budget, your credit items should be top of the list. And then when you run a debt to income, the debt to income is based on credit items. So that's kind of, you pay your credit items and then you manage your lifestyle. And so I think those things go hand in hand, because one thing that I'm certain is when I see a high debt to income, I typically see a low credit score. Though that relationship usually holds fast because you don't have enough money to pay your bills. And so maybe consider including what is on the credit report. But all of these are great things though. And I like number 6. And I really like number 5 because that will help your credit score tremendously. 5 and 6. Let's see, hold on. 2, 5, and 6 will really boost your credit score.
Wonderful. And that's what I'm looking for people to do. And that's something that I tell people, you can go to annualcreditreport.com to pull your free credit report from each of the 3 major credit reporting agencies and see what's on there. And so a lot of people just don't know. And once again, they have that ostrich effect to where they just stick their head in the ground, hoping it'll go away or get better. But when it comes around, they need that credit score. It's too late because they never knew what was on there. And so that's why we want to empower people to reach that level of financial dignity and wealth in which they've been called as well. And I think, let's see, I think we have a moment for another question. Okay, well, I'm gonna let you answer this because I answer this a lot for my clients. What about Credit Karma and those other groups that report your credit score? Is it good to look at them and like those other reporting groups?
This is my take on just being in the credit industry heavily. I'm biased against Credit Karma because, I've had so many people come to me and say, my Credit Karma score is a 780 and we pull it and it's a 680.
Yes.
And I tell them that we're not using Credit Karma to determine whether you're credit worthy. The bank is not using Credit Karma. They're paying Equifax, TransUnion, Experian big bucks to give us a score, your credit score. So Credit Karma has no effect on what we're doing. So Credit Karma is a guide, I think only. Yes. Because they're not going to be 100% accurate to reflect once you go purchase something. I think, Michael, I think you said it best. The most accurate that you can get in a free site would be the annualcreditreport.com. And you probably tell folks this, but I would stagger those 3 reports over the year. I wouldn't pull them all in January. I would probably pull January, July, November, or something like that, just to get a staggered report. And even so, that's just to make sure that you don't have any fraud and things like that, because this is the inside scoop. Each credit bureau has probably 100 different credit scores. And so I've worked at 3 different banks and had three different versions of Equifax. So you could have a bankruptcy indicator Equifax. You could have a high capacity indicator. You could have different levels of how Equifax reports. So I literally, case in point, we were doing mortgages at Regions Bank, and they decided to switch to what they call BNI Equifax credit. And that determined whether somebody was likely to file bankruptcy, and it affected the score. And I know it was based on high revolving, high interest rate debt. And so so their bankruptcy score and their Equifax, so there's different variations of the credit reporting that banks use. So Bank of America could pull an Equifax, and I could pull an Equifax, and we can have totally different scores. That's just how it is. And again, banks determine which score, which indicator they want to use when they're determining credit worthiness. So no, Credit Karma is not something that you should take to the bank and say, hey, my Credit Karma says this, I need the loan. Nobody's going to give you a loan based on Credit Karma.
That's true. And they use what is called a Vantage score, and y'all use FICO score. I don't know if y'all use 8 or 9 or different, but I know there are like 19 different, at least FICO scores people use, but Vantage scores, like you said, is what the credit bureaus or credit reporting agencies use. And they come up with this score that's so skewed from the actual credit, the real credit score, the FICO score, that when, you literally cannot take that to the bank. And that's why I tell people, go ahead and just let's see what's on your credit report first. And then the scores will eventually reflect once we get everything fixed up and looking pretty. And then we can go to the bank and say, hey, I got all this cleaned up. And if you want to get a pull on your number, I'm sure the bank will be able to help you out with that. But I try to get people looking good on their credit report before they come to the bank. And that's why I appreciate your insight on that.
Oh, yeah. And real quick, another opportunity to build on that is I did a study. I did an experiment, and I purchased a membership with Equifax. It turns out that during my membership, Equifax was breached and my information was tapped. But during that time, I felt like that Equifax, I paid for the service. It was like $17 a month. I could pull my credit every day. It didn't affect me. But that score was the closest to a bank score that I could get when it went, and that was a paid service. And I've heard TransUnion Experian have a very similar thing as well. So paying for a membership at one of the 3 large bureaus could definitely help if you really, really need to get into it. So I would recommend that over Credit Karma any day.
Very good. I appreciate that so much. And I want to thank you for your time again. And you've been such a wealth of knowledge and information. And I appreciate that. Ladies and gentlemen, I want you all to go to Elevated Development website. Go to Facebook. And I want you to connect with Elevated Development and see what they're doing and changing lives for the better, multi-generational wealth, closing the wealth gap, empowering people. So we're not alone in this. There are people out there that are trying to help us move to that next level. So I want to thank you again, Mr. Herman Hicks, for joining me tonight in Mastering Credit. Hopefully we pray that we can have you again in the near future and even connect with you on your next event that you're having with Elevated Development, or whatever you want to, just let us know and we'll be happy to connect with you, brother.
Sounds good, Mike. I appreciate you having me, man. And it's always a pleasure building with you. And yes, let's definitely do this again, because this type of information really lays the groundwork to build wealth. And so, at some point, I would love to talk about leveraging credit to buy assets.
Yes.
So
that's the next level.
Yes. As we move on down, people talk about debt. Debt is credit cards and cars. Leverage is when you're building wealth. So
there you go.
Let's distinguish between those two. So
yes,
absolutely.
I call it good debt versus bad debt. But
there you go.
Leveraging credit, that's one thing that I love to talk about, but I got to be quiet now because I'm going to go too far into it. So I appreciate you, man.
I got you. Okay. All right. It's good, man. I appreciate it.
Yes, sir.
All right. Thanks.
All right.
Peace.